Okay, good evening, everybody. Today is Wednesday, it's May 5th, and this is the informational meeting about the Magic Gold program. And it's 7 p.m., so I'm going to go ahead and start. There'll still be people coming in and out at various times tonight, but I'm going to go ahead and start on time. Now, the thing about this program is I have tried to create a trading program that is applicable to people who don't know anything about forex, or people who already are trading forex and are just looking for a way to make more profitable trades. Okay, so in this particular program, I won't be necessarily teaching you how to trade. I'll just be teaching you how to manage your trading account and the trades that go in and out of it. Now, when I first developed this program, what I was shooting for is I was shooting for a trading system that could essentially make somewhere between 10 and 20% in the account per week. Okay, and so if we're starting with account balances of $5,000, which I think is a reasonable amount to put in a forex account like this, that would mean that each week what we would expect to see in the way of equity gain would be somewhere between $500 and $1,000 a week on any given week. And the reason I've set it up that way is because I wanted to set it up so that our risk level wouldn't really be out of hand, or too much risk to be taking at any one time in the trades. But the thing is, that is huge profits. Okay, 10 to 20% per week is actually huge, because what that would mean is that these trading accounts would at that rate double about every 5 to 10 weeks. Okay, and 5 weeks is like a little over a month, right? And 10 weeks would be about 2.5 months. And so that's what I was shooting for. Now, the thing is, in the last 5 weeks, since I've been using the settings that we're currently using, these accounts have actually surpassed that. They have overperformed. Now, that does not mean that the accounts are going to overperform every week. Okay, we will have times that maybe the account might only make 5% in a week, or it could even be a situation where in one particular week we actually lose a little equity balance. Okay, that could happen too. But what we're shooting for is 5 to 10% a week, and like I said, these things have been overperforming. But in a typical day, I'd also like to see somewhere between 3 and 8 trades, anywhere in that range. Now, I have had in the last 3 weeks or 4 weeks, I've probably had 6 trading days where the account only made 1 trade in a day, or 2 trades in a day. So that can happen too, right? But most of the time, every time a singular trade closes, we're going to make somewhere between $28 and $60. So on average, we should make about $50 off of each closed trade. Now, if we're starting with an account balance of $5,000, 1% of $5,000 is $50. So if our average trade that closes is $50, then every time we close a trade, we're essentially making 1% in the account balance. Okay? Now, in the trading day that closed today, trading days don't go from midnight to midnight. I live in Kansas, which is Central Time Zone. So for me, the trading days close at 4 p.m. And as soon as one trading day closes, a new trading day opens, right? And there's 5 trading days in a week. All trading days, no matter where you live in the world, start and stop at the same time. So because I live in Central Time in the United States, the trading days for me start at 4 p.m. in the afternoon, okay? And they end at 4 p.m. in the afternoon, and the next trading day begins. So we had a trading day that closed at 4 p.m. today, and it's now 7 p.m., so that was 3 hours ago, right? But in the trading day that just closed, we had 4 trades closed today. That's all we had. But actually 3 of these trades were closed by the EA. And this first trade made $36.62, but if we want to know how many pips that was, that trade opened at a price of 109.195, and it closed at 109.235. So it closed for 4 pips. Okay, this next trade that closed also closed for 4 pips. Okay, now that's very odd that we had 2 trades that opened and closed at the same price. I'm really not sure why that happened. And then we had 1 trade that made $45.79, and it was it opened at 109.13.4 and closed at 109.18.4, so it closed for 5 pips. Now, this last trade that opened, and these 3 all opened pretty early in the day. You can see that's just really bizarre that those 2 trades at 2 different times opened at exactly the same spot. Okay, that's very unusual. And so I'm going to mute everybody for a few minutes while I do this part of the conversation, and then I'll open it up to where everybody can ask questions. But this last trade opened later in the trading day, and what happened with this trade, I actually caught this trade on video, and that's what this window is behind here, and I'll turn that on in a minute and show you what happened. But anyway, this trade was in there for several hours, and it never got profitable enough for the EA to put a profit stop on it, but it never got negative enough to hedge. And so finally what I decided to do, after watching it get profitable and then go negative and then get profitable again and go negative again, after a couple of hours I went ahead and added a profit stop to this trade when it looked like it was going to go negative for the 3rd time. And the trade had been in there for hours, for several hours already. You can see that it opened at 17:43, which would be this is in military time, and when it closed, when I put the profit stop on it, it was at 20:07. So that was about, what, 2 hours and 20 minutes later. But the thing about forex trades is that the longer it takes for the trade to become profitable enough to get the profit stop on it, the more likely it is that that trade's going to go negative and ultimately hedge. In fact, I have another account that had this exact same trade enter, and right now it's 7 p.m. and right now that trade is still an open position, and at this moment in time that trade is negative 97, 99, now 100, negative $100. Now it's negative 97 again. But I mean, here we are hours and hours later, and that trade still has not gotten profitable enough to have the EA put a profit stop on it, and it hasn't gotten negative enough yet for it to hedge. In fact, I can open this up, this trading account up, and bring an NZD USD chart up and show you where this trade entered. I'll just pull that onto the chart. Okay, now this chart is a 15-minute chart. Okay, so the trade entered right here. Okay, and what happened was, each bar is 15 minutes in time. The trade right after it entered, it went ugly. This is a sell trade, and the price went up. So the trade got ugly, and then the price came down, and it got a little bit profitable. Then it got ugly again. Then it got profitable again. And then it started going ugly again, so I put a profit stop on it right there because it looked like the price was going to go up again. Of course, I didn't know at that time if it was just going to go up to here or if it was going to go way up to there. Now, in the account where I did not close that trade is still open, okay? And in the time that it has been active, it has been, let's see, it went in at 72.09. We'll just call that 72.10. But the price has been as high as 72.24. Okay, so 14 pips negative. And it has been as positive as this, which is 72.90. Now this, I got to tell you right here, if this was a true bar, then the EA would have put the profit stop on the trade when the trade was 5 pips profitable, which would have been at 72.04, which would have been right about here. But this was actually not a true bar. I actually saw this bar happen, and what happened in here, the spreads on this particular pair jumped way up to like 7.8 pips. Okay, and so when that happened, it made this bar look much longer than it really was, because when that spread jumped, that's when we got this really long looking bar. But actually, if the trade had gotten 5 pips profitable, it would have, the EA would have added a profit stop to that trade, and then it would have closed. So really, the price didn't get this low. It didn't even get down to 72.04, because if it had, the EA would have closed the trade on that other account. But anyway, as of right now, That trade is still negative, but it never has gotten negative enough to hedge. But the thing is, at this point, it probably will, So this afternoon, what I did after I sat there and watched that trade go profitable multiple times and then look like it was going to start losing value, I went ahead and added a profit stop to close the trade. Okay, and that's what we'll do with our live accounts as well. And I'll teach you what to watch for, But in the same vein, if you don't get that trade closed because maybe you're working or sleeping or something like that, it's okay, because what will happen is if it gets ugly enough, the trade will hedge, and then the EA will create what we call a fixer trade, and it'll buy off that hedge. And I'll show you a situation with that here in a minute as well. But anyway, with just these 4 small trades today, what we did is we got $135 of booked profit. Okay, now that doesn't really sound like that much money, but when we think about the $5,000 that we have invested to have our account, $135 is essentially 2.5%, right? Because each $50 is 1%. So if we had an account that did nothing but average $135 a day, that would be about 2.5% per day, right? So each week we would be making about 12%. And at 12%, it would take about 8 weeks for the account to double. So that would be in 2 months. Okay? And that would be right in line with where we want to be. So anyway, that's how that works. Now, I'll show you how these accounts are overperforming. Actually, what's going to happen with this trade that's still on the other account, it will hedge when this trade is 15 pips negative. Okay? So when the price got up to here, when we were up at 24, if it would have gone up just maybe 1 more pip, then we would have had a situation where we would have this original trade and a hedge trade and a fixer trade, and that fixer trade would have bought off that hedge right here. So we would have actually made money off of that transaction, and now we'd be in a situation where we would be waiting for that trade to hedge out a second time. So I'll show you what that looks like. I'm going to go ahead and move this chart out of the way, and I'm going to bring this window up taller so that we can get more trades in it. And then what we're going to do is we're going to go to the history, and we'll just take everything that has happened in this current trading week so far. Okay, so I'm going to back up that date to Sunday. And now we can see all of the trades that happened this week. Okay, so, and they're in the order of the time that the trades entered. Okay, so what we see is that on May 3rd, which was the Sunday-Monday trading day, we had 1, 2, 3, 4, 5. So we had these 5 trades on the Sunday-Monday trading day. None of them hedged, because you can see that the EA is going to tell you what kind of trade that it's making, and it's either going to be an original trade, a hedge trade, a quick fixer trade, or one called a series trade, which we haven't had any yet this week. But on Sunday, 1, 2, 3, 4, 5 trades closed, and we had pretty good trades on Sunday. We had a $47 trade, a $157 trade, a 61, a 28, and a 59. Okay, so those 5 trades actually equaled about $280, which is a very nice trading day. That's about 6%, 5.5% in the account just that one day. Okay, then in the Monday, Tuesday trading day, which would be the 4th, May 4th, so from the highlighted trade down to here, we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25 events, okay? But here's what they were, okay? We started off that next trading day where we had an original trade for, okay, I'm sorry, the Sunday, Monday trading day was just these top 4 trades, but still it was $280. Okay, so then on the Monday, Tuesday trading day, we had a $59 trade, a 48, a 36, a 53, and then we had this trade, okay, for a 33, so it was a smaller trade. It only closed for 4 pips. And then we had this one. Now, here's what happened. We had a trade that hedged. So, actually, it was this trade right here that, see, it finally closed for $36. But before this trade closed, it went negative enough to hedge. So, it hedged right here, and a quick fixer was made. And anytime you have a hedge trade, you also get a quick fixer trade. Okay? So what happened with that is the quick fixer bought off the hedge. So hedges will always close for a negative amount because a hedge is a protective trade. It's protecting your account from the original trade that is going negative. Okay? And then the quick fixer trade is there to buy off the hedge when the hedge is no longer necessary. So in this circumstance, the original trade hedged and quick fixed. The EA does all this. You don't have to do any of this. But then the quick fixer bought off the hedge. So we closed our hedge for negative $64. But the quick fixer closed for $120 of profit. So actually in this hedge and quick fix transaction between the 2 trades, we actually made about $50, right? Well, after that happened, that original trade went negative again and hedged again and quick fixed again. So this is the second time the same trade hedged, and this time the quick fixer closed for 108 and the hedge closed for 18. So this time we made about $80 on this transaction between the 2 trades. Okay, then it hedged and quick fixed again. This is the 3rd time. Now this time it only made about $20 on that transaction of closing the hedge. And then it did it a 4th time. Okay. And this time we made about $40 off of the transaction. And then after this time, what happened was the price turned around enough to where that original trade went ahead and got profitable, and when it did, the EA added a profit stop to it, and then it closed for a profit. But in this Monday, Tuesday trading day, we made about, $400 off of just having that bad trade, hedge and quick fix, 4 different times. Well, about $300. Okay, because we made, what'd we say, about 50 and 80, 130, 150, and then 40. So about $200 off of just holding one bad trade. And then in that same trading day, we had a flurry of activity in the afternoon that day where we had 7 more trades enter. And of those 7 trades, because the market was moving really fast, we got some wonderful trades down here. We had a $90 trade, a $109 trade, and an $86 trade. So actually, in the Monday-Tuesday trading day, we actually made $870 that day. And then we go into today, which was a puny little day with only 4 trades and $135. But so far this week, the account has made $1,296 of profit. Okay, which is amazing. Now, last week, it did even better than that, because I think last week we ended up with $1,700 for the whole week. But what I'm telling you is that we're not going to get $1,700 every week or $1,200 every week. But when we do have a good week, we could have a, $1,500, maybe even $2,000 in one week. Now, I'm going to show you last week so that you can see what I'm saying. So what we're going to do is we're going to go to the custom period, and we'll back up the dates so that we only get the information from last week. So we'll start on Sunday the 25th, and we'll end on Saturday the 1st. So these are all the trades from last week. They won't even fit on the screen. There's so many. Okay? But actually we started this account that Sunday. Okay? Now you see that it started, these are demo accounts because I don't show my live accounts on the internet. Okay? But when you create a demo account with Coinex, it automatically gives you only $1,000. So if you want to have a demo account with $5,000, you have to add 4 more. Okay, I'll show you how to do that. But anyway, in the Sunday-Monday trading day, which would be all the numbers with the 26th, we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We had 10 trades on that first trading day of last week, and you can see that one of the trades hedged and quick fixed twice. Okay, and then we had all these trades on the 27th. We had 1, 2, 3, 4, 5, 6, 7 trades on the 27th, and again that same hedge and quick fix happened again, I think. Yep, it was the same trade that hedged and quick fixed in the next trade. And the next day. And then on the 28th, I'm going to do the scroll bar here. And we'll just bring it up to where we'll put that trading day at the top of our list. Okay, so on the 28th, we had an original trade that came out for a very small amount, then another one. These were probably trades that sat there for hours, so I probably went ahead and added those profit stops or closed those trades. But then we go all the way down to here. So what we see is that we had a couple of trades that hedged and quick fixed over and over and over and over and over again, which is a good thing. Now this hedge right here goes with this quick fixer. In that circumstance, we made about $120. Then the same trade, whatever it was, hedged and quick fixed again, and in this circumstance we made about 80. Now this was a different trade, I can tell from the trade numbers, but this hedge goes with this quick fixer, and we made about $70 on that. And then that same trade hedged again here, and there's the hedge, there's the quick fixer, about $40. Then that same trade hedged again and quick fixed again, and in this circumstance there's the hedge, there's the quick fixer, made about $50. Then it did it again. Here is the hedge, here's the quick fixer, we made about $45. And then we had a third trade that hedged and quick fixed, made about $30, $40 off of that. And then that one hedged and quick fixed again down here, where not sure why that happened. And then one more time it hedged and quick fixed again here. So we had a incredibly big day that day. Okay, then the next trading day was, oh, I'm sorry, somehow I messed up there. Okay, here was the 29th. So that was all the 28th. Sometimes the trade will move from one trading day to the next, right? But on the 29th, we had from here down to here. And again, we had hedges and quick fixers in there. And then on the 30th, we had four trades, and by the end of the week, we had made $1,701. Now this says $6,700, but it's including the deposit, right? But if you look over here on the right, it shows you how much profit was in this time. Okay, but anyway, these accounts they really are just totally overperforming, which is a good thing, and I'm not going to complain about that, because the negative PL at any given time has never been out of line. But what you have to remember, okay, what happened here is I right-clicked on it and I told it to show what's happened today. So in this trading day, we haven't had any trades close yet. Okay, but we'll go ahead and put this back the way we had it. Go back to the open positions. What you have to remember with forex is that the reason we put money into a forex account is so that we can use the money to make more money. Okay, so a lot of people have a misinterpretation of forex, and they open a forex account and they make a trade, and their trade starts going negative, and they go, oh my God, I'm losing money. I'm losing money here. But the thing is, you have to lose money before you make money, because every time you open a trade, your trade will automatically open with a negative PL, because your trade has to work itself through the spread before it can become profitable. And most of the time, when you open a trade, your trade might not go your way right from the get-go. Like this trade. This trade actually opened as a sell trade. It opened in this candle right here, which we got an excellent entry, because we literally got into this trade at the very top spot on that candle. But what happened in the next candle? The price went higher. So if this is a sell trade, our trade was going negative, right? So you got to remember that's okay if your trades go ugly before they get profitable. Because if they go ugly enough, the EA is going to hedge them. So it's going to limit how much investment you have in that trade before the hedge offsets it, right? And so, back to why we put money in the forex account. We put money in a forex account to use the money, okay, to make more money. And the way that we use the money, first of all, every time you go into a trade, you pay a small deposit to be in the trade. And that's why we use a very high leverage of 500 to 1, so that we don't have to use very much of our balance to be in the trades, okay? And then the other way we use the money to make more money is we use our money to fund the negative PL in trades that are not going our way, okay? So when you have a forex account, most of the time that you have open positions, your open positions are probably going to be showing negative PL until they start going positive. But once they start going positive, the EA is going to add a profit stop to them, or the trade will hit the profit target that we've assigned in the trade. But they'll close. The trades will close for profits, right? And usually they're not profitable very long before they close, okay? Because when I added the profit stop to this trade, right, it was less than a minute later that the price backed up and stopped it out. So once, it was profitable, it wasn't profitable very long before it closed. Now, if I'd had a bunch of other trades in there that were still working, more than likely those trades would still be showing a negative PL. So you have to get used to looking at negative numbers and negative PL. But it's okay. Okay, you can't freak out and go, oh my God, I put $5,000 in here and now I've got 5 open trades and the PL is negative $800. Well, that could happen, right? But it doesn't mean anything. Negative PL doesn't mean that you've lost money. It just means that you're using your equity for the reason that you put it in through the account. You're using it to fund that negative PL until the market turns around and the trades that you're in go positive. Once they go positive, they'll add a profit stop and then they'll close for profit. Okay? But it freaks a lot of people out when they see negative PL in their account. Okay? Because when you're talking about using one lot trades like we're using, you got to figure each pip that a trade goes negative is $10, right? Every pip it goes positive is about $10 in our favor, but every pip that it goes negative is negative $10. So if you have a trade that goes 10 pips negative, the negative PL on that trade is going to be $200 negative. If it goes 15 pips negative, 10 pips would be $100 negative. If it goes 15 pips negative, the negative PL for that trade is going to be negative about $150, right? So you've got to get used to looking at negative numbers, and it's okay. You haven't lost money. There's only two ways to lose money in Forex. You can close a trade when it's negative, and if you do that, you just lost money. Or if you run out of equity to fund the negative PL in your account, that's when you have what they call a margin call. And the broker will come in and close your trades for you at a loss. And you will lose all of your money. Okay? So we want to avoid margin calls at all costs, right? But the way that we have set up the EA, we've set it up in a way that it will hedge off all of the trades before we run out of equity to fund the negative PL that we're carrying. And it will hedge everything out before it will let you margin call. Okay, so you really don't have to worry about a margin call. Now, there could be situations in the market where we could lose our account to a margin call, because 3 times in the last 20 years I've seen situations where the markets moved so fast that it wasn't possible to put in hedge trades. Okay, so that's why you should never put money in a Forex account at all if you lost that money, if it would change your lifestyle. So what you don't do is you don't go, oh, I have $5,000 in the bank this week and I don't have to make my next house payment till next month, but my house payment is, $4,000. So I'm going to put my money in Forex this week, trying to double my money before next month. You don't do that, okay? With Forex, you put money in that you could afford to lose if something bad happened, and you'd still be able to pay your house payment next month. Okay, you don't put money in Forex if you need that money to pay critical bills within 6 months, because we never know what can happen. We might hit a bad spell where we can't take a withdrawal for 2 or 3 months in a row. I don't foresee that happening with this trading plan, but it could happen, right? So we want to put money in the Forex account that we can afford to sit on for several months if we have to, before we could take a withdrawal, right? Does that make sense to everybody? But anyway, this trade that I caught on video today, what I'm going to do now, what happened, like I told you, the trade that I'm talking about was actually in there for like 2.5 hours before I got tired of looking at it and took it out. Okay, by the way, the trade just like it that is still in there is currently $57, now $59 negative, because I did leave that same trade in the other account just to see how long it would take before it would actually either hedge or take care of itself. But what I did on this video, you're not going to have to watch this for 2.5 hours, because I speeded it up to, just a second, I'm going to get rid of this phone call. I sped it up to where it now only takes 36 minutes. Okay, so it's 2.5 hours compressed into 36 minutes. But I'm just going to turn it on, and so you can see that it just entered Here, I'll back it up again and let you watch it enter, because the EA just does it. It enters it all by itself. So the trade just entered, and now we'll bring this back to the front, and that can just run in the background. But what you want to watch is just kind of watch the PL on it. See, like right now it's profitable, and then it'll go negative, and then it'll get profitable again, then it'll go negative again, you know, and then finally at the end of the video you'll see me put the profit stop on it. But I'm going to go ahead and unmute everybody now, so if anybody has any questions, you can open your microphone and ask me anything you want about the trading strategy or you know, anything. Does anybody have any questions? Nobody? Gosh, you guys are easy. Okay, now what I'm also going to do probably this weekend is I'm going to do another video. You can kind of see how I keep my my MetaTrader trading account kind of compressed and small so that it doesn't take up the whole screen. And what I'll do this weekend is I'll do a video where I show you how to set up the MetaTrader account and prepare it for installing the EAs onto the charts. Now you can see that in this account each chart has the EA on it. Okay, so it's kind of like we're actually running 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. It's like we're actually running 12 separate EAs on this account, right? But the reason why this one looks different is because this one is actually acting as a manager for all the others. That's why it has a different color box. But what this is what I call the account risk manager. So in the properties window, see, the account risk manager is turned on this AUD-USD pair. Ooh, look, it's getting ugly. But it's not turned on any of these others. But what we're telling it is that all of the EAs will stop making more trades if we get more than 9 lots that are at risk at any given time, or if the negative PL becomes 25% of the balance in the account. And if that happens, the EA will stop making more trades, and then it will essentially hedge everything out at that first hedge position, and it won't make any quick fixer trades, because it won't make any more trades that will have the possibility of going negative. Okay, so now what I'm going to do with the properties box that you guys will have to use, it will be a modified properties box, so it'll be much easier for you to use. It won't have, you know, all this other stuff in it, because you won't need that. All you'll need is just a few lines in the properties box. So your properties box won't look like this when you get it for your accounts. But see how that trade is not going well at the moment. Okay, but and then look how fast it got better. A few minutes ago it was $60 negative, and now it's $9 negative. And here in a few minutes it'll go positive again, and then it'll go negative again. But you know, that's what happens. But usually the longer that you have to wait for a trade to become profitable enough to put its profit stop on, the more likely it is that it will ultimately go bad. So usually if I have a trade that I've had to sit on for more than an hour or so, if I usually will go ahead and either close them when they are profitable or at a profit stop so that they can't go negative again. Okay, so but you know, I'll teach you how to do that. But does anybody have any questions about how we're going to do the class? Well, it's not really class, but the program. Now what I'm going to do is I'm going to set up a website where you guys will be able to go in and see my open positions and my closed positions all the time. Okay, so that any time of day or night you can open that website, you can check your account against my account to make sure that you're showing the same open positions and the same closed positions that I have in my account. And if there are discrepancies, then all you'll need to do is email me, and I'll get into a GoToMeeting line with you, and we'll figure out what's wrong and why we're not getting the same trades. Okay, so I'm going to make that really easy for you guys. And the other thing is, occasionally there might be a situation where we would have to make a manual trade to intervene in a situation that gets hedged out. And if that happens, then what I'll do is I'll essentially send everybody an email and bring everybody into a GoToMeeting, or give you simple instructions via the email on where to place a trade to fix the situation where we have a series of trades that might get stuck. And sooner or later we will have a series of trades that will get stuck, because what I've done with this software is if a trade goes negative, it's going to hedge. When it hedges, it's going to make that quick fixer. Okay, if the quick fixer goes negative enough that it needs to hedge, it will hedge, but it will not make another quick fixer. So if those situations occur, which they will sooner or later, then we would have to make a trade to essentially act as the fixer trade for that second level hedge. Now, if you're not familiar with my trading strategy right now, that probably doesn't make a lot of sense to you. Okay, but it will make sense when the time comes. You have to actually live it to understand it. It's really hard to explain that situation when we don't have that situation going on here in this account right now. Okay. But oh look, and now it's not very negative again, and now you'll watch it go positive again, and then it'll go negative again. But let's see how far we are into the video. See, we're not even halfway into the video. So at this point in time, everything that's happened so far probably happened over the course of about 45 minutes instead of, what, 9 minutes that we've had that on. But I'll just leave that on. So trying to think of what else you guys are going to want to know. Does anybody have any questions about how to open the account with CoinEx or with Gemini or anything like that? You guys can hear me talking, can't you? Can somebody give me a shout out so that I know that you're actually hearing me?
I hear you. We can hear you.
Okay. Thank you. There for a minute I was thinking, oh my God, maybe I forgot to turn my microphone on, which I've done before. I've given classes and forgot to turn the microphone on. So for me, that's not unusual. Well, let's see. We've covered the expectations. Now, the other thing that I wanted to talk about, when you fund, and the thing is you can't do this until you actually fund your account with CoinEx, but once you have funded your account with CoinEx, I'm going to have you request the free VPN that they offer. Okay, because when we are running these live accounts, to make sure that the EA makes all the trades that it should make when it's supposed to make them, we have to have the MetaTrader turned on all the time. And when you have the MetaTrader running on your home computer, if you lose internet service for a time, like in a storm or something, or if your computer goes to sleep, or if you have a Microsoft update that closes your computer, your EA cannot manage the trades that it should be managing, or take trades that it should take, right? So what we'll do is we will actually run our MetaTrader accounts on a VPS server that we get for free from CoinEx. And that way those VPS servers never turn off. Okay, so that way we won't have to worry about Microsoft updates or shutting our computer off or losing our power and having our computers, down, or our internet down. We won't have to worry about that because we'll all be using those free VPS servers that are provided by CoinEx. Okay. Oh, what was it that we just saw there? I think what that was, it was where I opened another account for a second and it popped up on top of this account. I think that's what we just saw flash there in the background. I was really kind of hoping that we might have a trade open tonight while we're messing around so that you could see how it actually manages the trades. Well, a lot of you are familiar somewhat with my trading, the way that my EAs run, and some of you might not be. So, I don't know. I think I kind of covered everything. The situation is that I never set out to create a trading system that would be trading off of real short time frames like this. Okay, what's happening with the EA that we're going to use for the Magic Gold, it's actually trading off of 5-minute time frames. And I never would have done that if it wasn't a situation where the programmers that I'm working with that are going to add AI, artificial intelligence, into the Magic EA, they wanted to trade off of really short time frames. And actually what they're setting up, it won't be trading off of 5-minute charts, it'll be trading off of tick charts and 1-minute charts when they get finished with it, which means that it will make a lot more trades. Okay, but they'll probably be much smaller trades, but it might make, 400 trades in a day, but maybe each trade is only booking, a half a pip or a third of a pip or something like that. So when they get done with the AI part of it, the EAs could get really, really productive in profit. But about the fastest that I could take it down to get reasonable was a 5-minute chart. The 1-minute charts for, without having artificial intelligence built into it, are just too unpredictable to work with. But I've been using the same trading strategy for 20 years, and I have never traded primarily off of 5-minute charts before. I trade off of 4-hour charts and daily charts, and then I look at short-term charts to find my entry point, but I'm not looking for my primary trade signals off of that short of a time frame of charts. So this has been a real experience for me too, the last 3 or 4 months since I started working with these guys on the AI part of this. But I'm really pretty impressed with how it's working out, because it does seem to be very dependable. Now, the other thing too that we'll be doing with these accounts is that if we get to the end of a trading week and we have negative PL in the account, whether that's a couple of open positions or maybe it would be an original trade that's hedged and quick fixed but not profitable and not out, what I'm suggesting that we do is at the end of each week, as long as our booked profit for the week is more than the negative PL in the account at the end of the week, I'm suggesting we just buy off, use part of our booked profit to buy off the negative PL and not let negative PL revolve over into the next week. But we'll decide that when the time comes, because in some situations it might make sense to carry a negative trade into the next trading week, and other times it might not make sense. It might be better just to go ahead and get rid of it, but we'll decide that when the time comes. Okay, but anyway, this trade is negative again, and at this point in this little video, yeah, we're about halfway, so this would have been maybe about an hour and a half or so into this trade. And you've seen that, it's been profitable, it's been negative, it's been profitable again, and, it's been as much as, $60 or $70 negative, right? And I think it's been maybe up to about $20 profitable. But this is how the trades go. Most of them don't last that long. In fact, that's something I'll show you. Yesterday afternoon, let me back this up just to here. And I want to show you this flurry of trades that we got, yesterday afternoon, and show you how fast some of these things can happen. So it was these trades right in through here. This trade opened at 1811 and closed at 1814, so it was open like 3 minutes. This trade opened at 1812 and closed at 1819, so it was open 7 minutes. But the thing is, the reason why this trade got so big where most of our trades are going to close for like 4 to 5, 6 pips. The market was moving so fast that once the EA put that original 4 pip profit stop on this trade, the price just kept going so fast, and the profit stops move themselves. We don't have to do that. And as the trade got more profitable, it just kept moving the profit stop up. So this trade actually closed for, and in this case it was down, for 12 pips before it got stopped out. And then this trade down here, same thing. It went in at 18.14, came out 5 minutes later, but it closed for 11 pips profit. See, so the faster the market moves, generally the more we make on the trades. But some of these trades were just in here a couple of minutes, 18.12, it closed at 18.18. This one opened at 18.14, closed at 18.19. 18.14, 18.17. This one was in 3 minutes. This one was in 5 minutes. But sometimes when the market is moving really fast like that, you'll have a trade that you will never even see it if you're looking at it, because it will literally open and close within 5 or 6 seconds. It's amazing how fast trades can open and close when the market is busy and really moving. And it's and sometimes, you'll end up with trades that you never even saw them happen if you were even looking at it, because you blink or look away for a couple of minutes to go, look at a chart or something, and then you look at your account history and you're going, well, where did I get that trade? Never even saw it happen. And then if you look at the entry and exit time, you go, oh, well, it was only there for 4 seconds. So, but anyway, that's why I really like fast markets. My trading system that I've used for 20 years, and the EA, the way I have always used it prior to now, it does its best when the markets are real volatile. That's when you get in and out of trades the fastest, and when you make the most money and the most trades. The slower the market is, the slower the profit comes, and the more likely you are to get stopped out for a couple of pips, instead of getting, 10 pips, 20 pips. Every now and then we'll have a trade that will actually hit the profit target, but don't plan on that happening all the time. That's honestly rare, when we have trades that hit our profit targets. But when they do, they make a lot of money. I think we have them set up to take profit targets at 25 pips or something. So for most trades, that would be about $250 on a trade if it hit its profit target. So there is that. Now see, this silly little trade is profitable again. Okay. Now this second time that it got profitable, I can't really remember. At one point, I know it got profitable to the tune of about $40 or so. It just missed putting its profit stop on by about a pip or so, but it didn't. And then ultimately, I closed it for 25. But now currently, that trade is still open on the other account, and it's $92 negative right now. So I'm glad I took it out for $25. But anyway, it's always fun to watch your history and see how long the trades lasted, because some of them will sit in there for hours before it finally gets a 4 pip stop. But usually the trades that make the most money are the ones that are actually not in there very long. This one went in at 9:09, came out at 9:58. So that was in there quite a while before it got stopped out. This one was in 14:09 and came out 2 hours later. So it took quite a while, but once it started moving positive, it kept going. So that was good. This one was in 3 minutes and stopped out for 4 pips. This one was in for, looks like, about an hour. So anyway, it's fun to kind of look at the history and see what happened. But the EA will always tell you, both in the open positions and in the closed positions, what kind of trade it is, if you have the comments opened. Okay, now on this account, I didn't have the comments column open when this trade was running. But you can open and close the comments by right-clicking on it and closing them. And a lot of times I'll keep the comments closed just so that I can make the window smaller. See, but you guys will probably want to keep your comments. Whoops! Did I turn that off? No, it's still running. Okay. Your comments on until you get used to seeing the trades. And I don't need to look at the comments because I can tell by looking at the trades if they're original trades or hedges or quick fixes. But when you're not familiar with it, it kind of is nice to have the comments open so that it tells you what kind of trade it is.
Hey, Mindy.
Hi, Darren. How are you?
I do. So as we progress with this, and we get into a couple of months, when the AI comes out, are you planning on putting that on these accounts?
I don't know. I'd like to. The thing about it is, we're probably looking at least 6 months from now before the AI part of it would be ready for prime time, because I don't even have the first round of it yet. So we're probably looking at least 6 months before it's even going to be ready for prime time. But I'd like to. If it does everything that they say it's going to do, yeah, I'd like to do that. Because, I mean, that could literally be a situation where our accounts might double literally every week. I mean, it's going to be pretty darned amazing is what it's going to be, if it's everything that they say. And I have no reason not to believe them. The two guys that are doing this, one of them is literally the best AI programmer for financial institutions in the world. And the other guy was essentially on the team that invented artificial intelligence, not for financial applications, but literally was part of one of the people that literally invented artificial intelligence for programming. So, I mean, if I was paying these guys, it would cost me probably $2,000 an hour is what their billing rate would be, something like that. If they even had a billing rate, they would probably instead be charging me like $250,000 to do anything for them, have them do anything for me. So I don't know. I have full faith and confidence in them, but we'll just, you know, see. But it is going to take time, you know, and but I'm hoping to, yeah. And I think it'd be great. I think it'd be super great. Now, if it gets to that, though, the monthly subscription fee for the service is probably going to go way up, too. Because they'll be getting a cut of it as well. Right.
Right.
So, you know, it might be a situation where, you know, it costs $1,000 a month for the license fee. You know, because the bulk of that would be going to them. But you know what? If we can make $20,000 off of a $5,000 account in 1 month, I don't think anybody's going to be whining about paying $1,000 a month for the license fee. You know, but I don't know. We'll worry about that when the time comes. But yeah, I'm hoping to.
So you said later on you're going to give us an opportunity if we wanted to grow our accounts and an opportunity to invest in gold and stuff like that down the line.
Yes. What? Here's the deal. I feel really responsible when people open forex accounts. My first and primary goal is to make sure that however much money you put in your forex account, you get that much money back in your pocket before anything else happens. Okay? Because let's just say we put $5,000 in, which we're all planning to do. Okay? Once you have made $5,000 of profit, you need to take that first $5,000 and put it back in your pocket. So you take that withdrawal, you know, and you put it back in your pocket or back in your bank account, wherever you took it out of, to put it into the forex account. Because now we still have $5,000 in the forex account, but we're working on the bank's money at this point, right? And so then if something bad happened and one of those freak tsunamis hit and we lost everything in the account, we haven't lost anything that we put into it. We lost the profit and we'd be sad, but we wouldn't be as sad as we would be if that was money that we had worked and toiled for to put into the account to begin with, right? Are you with me on that part?
Oh, yeah. Mm-hmm.
Okay. But, okay, see, I think this is the part of the video where I'm getting ready just to close this trade, because I keep looking at it and thinking, man, if this puppy's gonna go ugly again. I think right in through here, this is where it literally got within about a pip of putting on the profit stop by itself, and I was rooting for it too. I was going, come on baby, move, get down there, put that profit stop on. And then it starts going negative again, and here in a couple minutes I think is when I just decided, nope, I've seen enough. I'm not letting this thing go negative on me again. And that's, you'll see me put the profit stop on it. But what I'm suggesting is, even with a week like last week, where at the end of the week we were $17 up, right? There was no open positions on Friday. That would have been a perfect opportunity to take $1,700 withdrawal and start this week back at $5,000 again, right? But here's the thing. Do you know what the price of gold is right now? It's about $1,700. Okay? So what could we have done with $1,700 last Friday? Instead of taking a withdrawal, what we could have done is bought an ounce of gold. Okay, now, whoops, did you see it? I just put the profit stop on. Now here, I was going to try to move the profit stop. I couldn't move it. It didn't give me a chance to move it, so what happened was, see, I have this sped up so fast you can't really see. But anyway, once I put the profit stop on, then I reopened the stop window so that I could manually move the profit stop if I got a chance to do so. And it stopped it out. And so then I went over and looked at and this is hard, right there. I went over to look and see what I got on the trade, and I got $24, and then stopped the video. So anyway, there was that little trade. Okay, now right now, that trade on the other account is negative $116 negative. If it gets to about $150 negative, it's going to hedge and make a quick fix. But I won't get the benefit of that quick fix and hedge in this account because I closed it already. But you know what? After 2 hours of watching a trade go back and forth, I'm usually ready just to get rid of that trade and move on, which is what I did today on that trade in this account. Okay. But you know what? Every time we can buy an ounce of gold, let's do it, is what I say. And that's the same as putting the money back in your pocket, right? So, here's the benefit to it. I have found some gold brokers that now accept cryptocurrency for payment on gold. So, to buy our gold, we're not going to have to take our money out of CoinEx, put it back in our bank account, and then go to the gold broker and buy gold. We'll literally be able to make a withdrawal directly to the gold broker as cryptocurrency right out of CoinEx. And that's going to save us in transaction fees. And we won't have to move our money in and out of our bank accounts all the time. So it's going to be really nice. But
So,
what?
I was going to ask you, once we buy the gold, I mean, exactly how does that work? How do we get it?
Well, they literally mail it to you. It comes DHL or FedEx. And let me show you one of my gold brokers here. Just a second. Let me figure out. Okay, that trade just hedged, by the way. The one that I closed this afternoon. It just hedged in the other account. Okay. This is one that does, in fact, take cryptocurrency. But what we're looking for is gold. Okay, here's what I buy. I buy the little bitty gold bars. They're about the size of your little fingernail. But you can buy them in grams or tenth of ounces. I prefer the 1/10 of an ounce gold bars. And 1/10 of an ounce is a little more than 2.5 grams. It's 2.8. But this would essentially be the equivalent. But the reason I like these is because, okay, I grew up in a family where my dad was kind of a survivalist before it was popular, in the 1950s. And you have to understand that the US dollar right now is not on a good path. There's every likelihood that our US dollar is going to become worthless, the same way the Venezuela dollar became worthless. And it could end up in a situation at some point where we have to literally barter for goods and services, right? And so if currency is no good, gold will be good, right? And so when you think about 1/10 of an ounce of gold, right now, that's about $175, right? Because an ounce of gold is like $1,750. But $175 kind of equates to what you would spend for a week's worth of groceries if you were trying to feed a family of 4, right? So if we have hyperinflation, or if we ever get into a situation where our currency's no good and we have to barter, the 1/10 of an ounce gold bars will be the equivalent of what it's going to cost at that time to essentially buy a week's worth of groceries, right? Or if you got caught in the situation where you just had to get out of Dodge, right? Get out of town, and you would say, I would give anything for a tank of gas to get out of here and get into the country or whatever. You would probably be willing to pay somebody $175 for a tank of gas right now if you had to get out of town bad enough, right? But you wouldn't want to pay the equivalent of a gold eagle that's $2,500, right? You wouldn't want to do that. So you don't necessarily want the gold coins because they're worth more because they're heavier and bigger. But 1/10 of an ounce of gold, I keep a couple of these in my car at all times, just in case I have to bail myself out of a fast situation. Okay? I do. I always keep a couple of them in my car at all times, just in case I have to barter my way out of some creepy situation that might arise, and probably won't, but that's okay. I've got them in there anyway, just in case, right? But that's why I like these little gold bars, okay? Because if we ever have to use them, we can, we could use them to barter with. But now the thing is, if we have hyperinflation and our dollar becomes worthless and a week's worth of groceries at that point cost $1,000 instead of about $175 that it would today, this one little gold bar is still going to be worth enough money to buy that $1,000 worth of groceries, because gold holds its purchasing power. Okay? Doesn't matter how much inflation goes up. If an ounce of gold right now is $1,750 and we have hyperinflation, an ounce of gold might become $5,000 to buy. But if we're still holding that ounce of gold that we bought at $175, it now has a purchasing power of $5,000 because that's, what it would be worth at that time. See what I'm saying? So we don't necessarily buy gold as an investment. We're not buying it today so that we can sell it tomorrow and make money off of it, because the purchasing power isn't any different. It's hard to buy gold as an investment, because if you're buying it today and selling it tomorrow for more money, the only reason why it's worth more money tomorrow is because of inflation. So you're not ever making money off of holding gold as an investment. You hold gold as insurance, not as an investment. Because as insurance, the purchasing power of an ounce of gold today isn't going to change tomorrow, the purchasing power tomorrow is going to be the same as it is today. Does that make sense to you guys?
Yes. Mhm.
But the other thing is, let's say that we stockpile gold, and for the next 2 or 3 years, every month we're buying a couple of ounces of gold, couple more, couple more, couple more, couple more. So maybe in a couple of years we got 2 pounds of gold in little bitty gold bars, and you decide, hey, this is ridiculous. Mindy was nuts. The end of the world's not coming, and I would prefer to put my money into a house, a deposit on a house or whatever. Well, sure, you can sell your gold at that time and turn it into a down payment on a house or buy a car or whatever, but you're not going to actually make money by holding the gold, because the purchasing power stays with inflation, right? But still, so what? If you did need it as insurance during that time instead, you're not going to lose any money by holding gold, but you're not going to make any money by holding gold. See what I'm saying? Does that make sense to you? But you can always sell gold. You can sell it back to the brokers. They'll buy it back from you. You don't have to put an ad in the paper and go, oh, I have some gold I want to sell. In fact, that's the last thing you would do, because then people would be coming and robbing you. They go, oh, Darren has gold. Let's go rob Darren. You don't want to tell people you have gold. Okay? But if you ever need to use it to barter, yeah, you use it. But you never brag about it, because people, if people know you have something of value, they're going to try to steal it from you, right? But if you ever want to sell it and cash out, you can do that. You can sell it right back to the gold brokers you bought it from, right? Or you can sell it to pawn shops, whatever. There's always somebody that wants to buy gold. But that's why I prefer these little tiny gold bars. They're very light. I mean, there's just almost nothing to them. They're like a teeny little wafer, about the size of your little finger nail, But they're just what we're going to need if we ever find ourselves in a situation where we have to barter. Okay? But holding gold, you're never going to make money, because it's going to keep pace. The price of the gold keeps pace with inflation. So you might get more money for the gold when you sell it than you paid for it, but that money isn't got any more buying power tomorrow than it had today. You haven't lost anything. Does that make sense? You don't make anything by holding it, but you don't lose anything either, because the purchasing power of what it will buy remains constant. But anyway, and that's what we'll do. Once you've got your money back in your pocket, then the profit from that we make on the account will buy gold, if you choose to do that. If not, just keep booking your profit. But once you have put the original $5,000 back in your pocket one way or another, then what we can do is we can start growing the account. Like if this account had been in here long enough that, I'd already taken a $5,000 withdrawal, right? And now the account has $8,000 in it. If I wanted to, I could bump up the size of the trades and essentially start making just itty bitty bit bigger trades and getting this balance to grow until maybe it got up to $20,000, right? And then at $20,000, what would I do? As I gained more profit off the $20,000, I'd keep scooping off the profit in excess of 20,000, putting it back into my pocket until I had put $20,000 more back into my pocket. And then I'd buy some more gold. And then, maybe I'd want at that point to grow the account up to $30,000. And then once it got to $30,000, the next bunch of profit that I made, I would take that until I had taken $30,000 more in profit back into my pocket or back into gold. And then I'd grow the account maybe up to 40,000 and do it slowly like that. But what you got to remember, it does no good at all for you to put $5,000 into a trading account, never take any withdrawals, grow that account to $50,000, never having taken any withdrawals, and then have some freaky, horrible thing happen and lose all of it to who knows what. A nuclear bomb, a world war, a broker that goes bad, some freak move in the market. The only way to protect your profits in forex is to get them out of forex. Put them back in your pocket, put them in gold, buy gold, do something. But any money in the forex account is inherently at risk of disappearing. Now, hopefully it never will, but it still is at risk of disappearing. So you don't leave money in there that you don't need to leave in there to do the job that you're asking it to do, which is to use it to make more money. Never leave more on the table than is necessary. Does that make sense?
Yes, it does.
Okay. Well, let me show you this. This is here is that trade that I took out today for $25. Here's the hedge. The hedge has been in there for 15 minutes now. It still hasn't picked up one of the quick fix orders. It's still just sitting there. That's how slow the market's moving. Now, the thing is, see, when we got the hedge, the EA put on 2 quick fix orders. It put one below the hedge price and one above the hedge price. Now, when one of those 2 orders picks up, the other one will just disappear. Okay, because it's only going to pick up one of the 2 orders. Now, actually, the stop order would be the least profitable. How when we had those hedges and quick fixers, and like one time when it closed it made $50 and another time it made $80, and it depends on which one of these orders picks up. If the limit order picks up, that would be the prime, that would be the better pickup. That's the order that would make the quick fixer hedge exit combo the best deal. But sometimes you pick up the stop order. The reason we have the hedge essentially bracketed is because what we don't want is the hedge to get real positive or real negative without picking up one or the other of the quick fixers. Okay, so we'll just watch this and see which one of these picks up. Now the thing is, the stop order will move. So if the price goes up, the stop order will move up into better positioning. The limit order will not move. So if we have the limit order set at, I think, 7 or 8 pips away from the hedge. So if it picks up, that's actually the better pickup. but the stop order is initially set 2 pips below the or above, depending on if it's a buy or sell, above the hedge. So actually this stop order is already moved once. It would have started out at 72.26. Okay, so it's, or 25. So it's already moved once. So it's moving into better position. But we'll see how long it takes. That's how slow the market's moving. Usually when you pick up a hedge and these 2 orders go in, almost instantly one or the other of them will pick up. Typically. So it's usually you won't see a situation where the 2 quick fix orders are just sitting there for an hour or whatever. It usually does not work that way. Okay. But anyway, do you have any other questions about the gold purchases? But when you buy gold, what we don't want to do is we don't want to buy gold stock. Okay, we want physical gold that we can put into the safety deposit box, or, in our safe at home, or whatever, because we want to have access to it if we ever need it. Okay, so people who own gold stock and gold shares, those people might be in for a very ugly surprise if they ever want that gold, because they're not going to get it. Okay, if we have it in our hands, we will have it in our hands. That's why you want to buy physical gold, right? And when you get to the point where you have enough little 1/10 of an ounce gold bars whoops, I didn't mean to make that big, I just meant to drag it up. Then you can start buying physical gold in, other ways. You can start buying the gold eagles and stuff like that. They're much more expensive, right? First of all, you're paying not only for the ounce of gold, but you're paying a surcharge because it's been stamped into the coin. So the coin itself has some intrinsic value above the price of the gold bullion that it was made out of. Okay, so, but collector coins like this will sometimes gain more value than just the value of the gold. So when you get into the rare coins, that's when you can buy a coin that has an ounce of gold in it, and in certain conditions, the value of that coin, dependent on its rarity, might actually be worth 4 or 5 times the value of the bullion in the coin. But right now, we are really not interested in buying collector grade coins. We're just interested in buying, the bullion coins, just the little stamped, gold bars. Okay? Because they're the most practical if we ever want to use them. Now somehow, I think I need to close that. Yeah, that'll bring us back here. So this account is still just kind of sitting there. We'll see how long it takes for that to pick up one of those quick fixers. Okay. Move this back down. Like that. There. Now we can see everything at once. But okay, so does anybody have any other questions? But the good part about it is transferring Bitcoin directly out of our CoinEx account directly to a gold broker to buy our gold, that's going to save us a lot of transaction fees, moving money back and forth and in and out of the banks and doing wire transfers and all that stuff. Okay, does anybody have any other questions about it? About anything? Now, here's the other thing, too. When it comes to buying the Magic Gold program from me, I gave you two options in the letter that I sent out. You can use PayPal, or you can pay me in Bitcoin, either one. Now, here's the thing. The way that I set up the payment link, I did not set it up, or maybe I did, I don't remember. If I set it up as an automatic payment, I think it is. But after the first month, if you want to, you will be able to pay me the next month's subscription fee directly from CoinEx, if you want to, by doing a CoinEx transfer payment to me instead of using the PayPal link. So that should make everything easier for everybody also. So anyway, but we'll worry about that when the time comes. But that will be an option for you guys if you want to use that option. Instead of having it debit your charge card every month for that license payment, you'll be able to just make a CoinEx transfer. And that way you've got all of your accounting right here in your CoinEx account. So anyway, that'll be a nice feature too that we will have if you want to use it. And if you don't, you don't have to. He might have walked away. He has a dog that he has to take care of. But anyway, that's about all I can think of to tell you guys about. We'll just keep watching this and see how long this takes. What we're watching for right now is we're watching to see if our stop order moves again before it picks up. If it does move, it's going to move into a better pickup position, right? But sooner or later, one of these two orders will pick up. And then depending on how the market moves after that, the quick fixer will buy off the hedge when the hedge is no longer necessary. And then that will open the original trade up to close for profit if the price moves down enough. The current price is 26.6, so it's going to have to move down a couple of pips to pick up that quick fixer, or it's going to have to move up a couple of pips to pick up that one. Does anybody have any questions about how the trade management works with the quick fixers and the hedges? The one thing that you have to remember with these accounts is that sometimes what you'll see when you get a number of trades all working at the same time, what you have to remember is it might be very, very tempting sometimes to see a hedge trade that's very profitable, but you never want to close a hedge for a profit. Okay? Because that's going to screw up your chain of trades, for one thing. And if you close your hedge for a big profit, you're leaving your original trade unprotected. And then the original trade would actually be more negative than the hedge is profitable anyway. So you really are not doing yourself a favor by closing a hedge out of sequence. When you're using an EA like this, it's really important just to leave it alone and let it do its thing. And if there's ever a situation where we need to make a manual trade to intervene, I'll let you know what we should do and what trade we should make and how we should manage that trade to help fix whatever situation that we're in. Okay? But you never want to close a hedge for a profit, no matter how tempting it is to do that. It never helps. With this particular account, this account started trading 1 week before this account, and it has a balance of $8,560. Now this trade right here that you can see has no comment. This was a trade that I put in accidentally. So, I can't remember what happened. I think I accidentally clicked on the blinky box, and that's one reason why I keep my blinky boxes covered up, so that I don't accidentally make trades. Because when we have I call these the blinky boxes because they're always blinking red and blue, and the numbers are always moving because it's the current price, right? If you accidentally click on one of those, or if you accidentally hold your cursor on one of those for more than a couple of seconds, what happens is MetaTrader thinks you wanted to make a trade, and it'll make a trade. And I think that that's how I managed to get this trade in this account. But I decided just to leave it there. Sooner or later it'll come out. So until it does, it's a good example of how ugly a trade can get when we're talking about a one lot trade. Okay, the pip value on a one lot trade is essentially $10 per pip. So, this trade right now is about 230 pips negative, right? But the good thing about forex prices is they go up and down. And they go down and then they go up, and sooner or later the price will go up high enough that this will become profitable, and I'll close it out as soon as it is more profitable than the cost in the trade. It's been there for a week and a half, so the swap fee is beginning to add up a little bit. So $60 means I'm gonna have to make 6 pips off of it just to pay for the swap fee. But it'll get profitable enough sooner or later, so when it does, I'll take it out. But the other good thing about it is you can see that even though that great big ugly trade is in there, it has not stopped me from making other trades. So that part's good because the account overall is not ugly enough to stop the trading. So still got plenty of margin left to manage these trades comfortably. If not, this trade would have hedged and it would not have made the quick fixers. Okay. Yeah, 2 weeks and 2 trading days, and the balance is already up almost 100%. If it gets to $10,000, it'll be 100%. And that could happen this week. 2 weeks, the account balance doubles. But with this particular account, we're still stuck with this trade. But even right now, the equity balance is still up $960 more than we started with. And it's been, 2 weeks and 2 trading days. This account is 1 week and 2 trading days old. So, and I just think they're doing great. But we could have a day that we don't make any trades, or maybe we only make 1 trade. But if this account right here, the one that we've been following, if it didn't make any more trades this week, it still had a good week already. If we go to the account history and just go to what it's done so far this week, it's already up $1,200 this week. It made $1,700 last week, but actually almost $1,300. That's a hell of a good week. So we still have 2 trading days left. It might get a lot better. It might not get any more better. Or we could end up with some trades at the end of the week that are ugly. So we'll see on Friday. Okay. Did that move? I think that's stop might have, maybe not, maybe it's just me. I was thinking it was 224 a minute ago, a few minutes ago. Maybe it wasn't. But the stop order will move into better positioning. And because it's a sell trade, that would mean that the stop order would move up. So it'll go from 72.25 to 72.26 to 72.27. It'll keep moving up. If the price moves up far enough, it'll pick up this trade at 32. This trade stays there. This one moves into better position. Okay. And the higher it moves up before it would be picked up as a trade, the better it would be for the hedge situation, because we'd make more money off of the combination, because the hedge will close when it's negative. If nobody has any questions, I'll just stop talking and we'll just watch this. But that way, when I make the video recording of this class, I'll just cut out all this quiet time so that people that watch it later won't have to sit through 10 minutes of nothing. There's really nothing worse than watching slow markets. It's just like watching paint dry. It's so much more fun when the market's actively moving. But that's the great thing about the EA. We don't have to sit here and watch it. We can just let it rip, and maybe about once or twice a day go in and check, and check your account against mine and make sure that we're getting the same trades, the same closed positions, the same open positions, and as long as everything's okay, you can get a good night's sleep or go to work and not worry about it again. It's not like you have to sit and watch it every minute. But when the market's active, it is fun to watch. It was a lot of fun to watch the other day when in the afternoon all of those trades were going in and out so fast. It was pretty exciting to watch it do that. Every now and then it's fun to watch it, because you'll see a trade open and then you'll see it close, and a couple more will open, and all of a sudden you'll see your negative PL go up to like, $400 and then $800 and you're going, oh no, what's happening? And then 2 minutes later, it's got a positive PL of $50 or something, and the trades are starting to close off and stuff. So it's really pretty exciting. But you got to remember during those times, negative PL is temporary, okay? And don't freak out. Start closing the trades, thinking, oh my God, if I don't close them now, I'm going to lose all my money. No, you're not going to lose all your money. It's going to take care of itself. Okay, so, but it is scary if you've never seen it happen before. Okay, so you have to prepare yourself mentally for looking at negative numbers. But they don't mean anything because it's not a loss unless you book it. Let's go see how the price of gold is doing today. This is a website that I watch. I keep it open on one of my other monitors all the time. It's got the Dow and the S&P and the NASDAQ, and here's gold. Gold right now is $1,786. And of course, let's screw this up. We're actually in the after hours right now of the stock market. So in the after hours trading, the futures market, the Dow is up 59 right now at 34,000. I like this marketwatch.com website. It's a pretty good one to just kind of keep open. If you have extra monitor space, some people do, some people don't. But if you only had one monitor or something, you could keep it down like this. What I do a lot of times is I keep things that I might want to look at, I keep them down here at the bottom of my window, and that way it's not interrupting anything. And then when I want to see it, I just pull it up on the screen where I can see it, and stick it back down the corner again. Oh, whoops, I didn't mean to do that. What did I do? Oh, I see what I did. Made that bigger. What I'm going to do is I'm going to bring up a chart in this account so that we can watch this. And this is an NZD. Here's where I took that trade, or the EA took that trade. Here's where I closed mine, and now this is where the price is currently. So you can see that for the last hour, well, no, I guess these are 5-minute charts. 15-minute charts, yeah. For the last hour, it's just kind of been sitting up here in this area. It's not going anywhere. And of course, that's right where we picked up that hedge, right about where the price is right now. Okay, I see that we just had someone else come on. What we're doing is we're watching the EA work. What happened is it opened an original trade this afternoon, okay, hours ago, and just a few minutes, well, about 20 minutes or so ago, that original position got ugly enough that it picked up a hedge. And when it picked up a hedge, the EA put on quick fixer orders so that the EA can buy off this hedge when the price starts getting close to the original trade again. And so we've been sitting here waiting for about an hour now for one of these two orders to pick up. Okay, so that's what we've been doing. But I am going to put this entire video out as to where you can view it, the whole thing, on demand. And so you'll probably want to watch the video. But because what I did at the first of the video is I discussed how the EA works and essentially how the whole Magic Gold program will work. But we also looked at the account that we've been following, and this account started with $5,000. It's 1 week and 2 trading days old, and it's already up to almost $8,000. So it's actually been outperforming what I thought that it would do. And in this current this is the account history for this entire week, but in the most recent trading day, that would be 5/5. We only made 4 trades in the trading day that ended at 4 p.m. this afternoon. And so far in this current trading day, we haven't had any trades enter yet at all. So, but so far this week, it's closed $1,296 of profit, and there are currently no open positions, which is what you want to see. You really don't want to see situations where you're carrying trades for a long time. You want them to open and to close, and that's always a good thing. Okay. Now, what happened is this afternoon, this trade right here in this account also opened in this account. And here's where it opened, right there, as a sell trade. After several hours, what I did is when it was profitable, I manually added a profit stop to it, just because typically, if you have a trade that's been in there for several hours, there's every likelihood that that trade will go against you, just the way this one did. And now it's hedged and is trying to pick up a quick fixer. But, it's not a bad thing if you have a trade that goes negative and hedges and quick fixes, because when that does happen, we make more money off of those situations than we make off of just having the, whoops, that wasn't what I wanted to do, than we make off of just having the trade close naturally. But, okay, I've got comments checked, so where are they? Because what will happen with this hedge and quick fix situation is the same thing that happened with these other hedge and quick fix situations, where the quick fix buys off the hedge when the hedge is negative. And so in this situation right here, we actually made about $40 off of that transaction. Okay, and sometimes the same trade will hedge and quick fix multiple times, like it did here. This was the same trade that hedge and quick fixed 1, 2, 3, 4 times yesterday. So it's not a bad situation when you have a hedge and then a quick fix. It's actually kind of good. But the more optimal situation is when you have trades that just open and close and get done with it, and then you don't have to worry about them. going negative. Okay, so anyway, that's kind of one of the things that we talked about earlier. But do you have any specific questions that you would like to ask about the program or the trading strategy? But this chart right here essentially shows you how long this original trade has been in there. It started off right here the same way it did in this other account. These are 15-minute bars on this chart. So it's been hours and hours and hours. So sometimes trades stay open for a long time. Most of the time they don't, but sometimes they do. Okay, the current price right now is 72.25.8. Okay, 9. If it gets down to 72.25.0, this side of the quick fixer will pick up as a position, and this one will just disappear. If we wanted to see this in a different time perspective, we could make this a 1 hour chart, and then it doesn't look so bad. It doesn't look like it's been in there as long. But actually what's happening is the EA is actually trading off of a 5-minute chart. So if we wanted to see how long the trade's been in there in the 5-minute chart, it would look like this. So a long time. But I like when I'm watching trades, I like to watch them on 15-minute charts. I'm going to do another video probably tomorrow. If not, I'll have it done by the weekend, where I will show you how to set up the trading accounts the way I do, so that if you want to essentially have your MetaTrader account set up the way that I do it, you'll be able to know how to get it set up this way. But I like to keep my MetaTrader window kind of tight and kind of small. And actually, most of the time, what I do is I keep it set up about like that, where I'm not necessarily watching the charts. I'm just watching the trades go in and out. But right now, we don't have any currently open positions in this account, and we wanted to watch a chart. Even though we're watching a trade in this account, we're watching it's the same trade actually. This one was the same as this one. I just stopped it out manually in this account, and in this account I just let it ride to see what it would do on its own if I just left it alone. And it's going really slow. But I'll be happy to answer any questions if you have any about anything, about the strategy, my experience in forex, how the EA is structured. Anything you want to know, I'm willing to answer. Just a second, I have to check another computer real quick. In the video that I prepare from this session tonight, I'm going to cut out all the dead space where I'm not talking. Okay, so it won't be quite as long. Now, see what's happening is it picked up one of the two quick fixers. Okay, it picked up actually the stop order one as this price came down. But see how the quick fixer, because it's a larger trade, the profit in the, I didn't want to close that. The profit in the quick fixer is overtaking the negative PL in the hedge. See how that works? Now, it's actually structured in a way that when the quick fixer is 9 pips profitable, what it's going to do, it's going to close the hedge and put a profit stop on the quick fixer. So when the quick fixer has a profit stop on it and it closes the hedge for a negative, there'll be more profit in the quick fixer than the negative in the hedge, and the quick fixer can then continue to get more and more profitable unless the price backs up and stops it out. Okay, so right now we're about halfway to the point where it would do that, because if it went in at 72.24.9, we can call that 72.25. If the price gets down to 72.16, it's going to close the hedge, add a profit stop here, and then if the price continues to go lower, the quick fixer will continue to get more and more profitable. But if it stops out, that's okay, because it would have done its job to buy off the hedge. Okay, does that make sense to everybody? It'd be nice to see this quick fix close that hedge so that you could actually see what that looks like. But the whole point of the hedge was to protect the account from the negative PL that was in the original trade. And then the point of the quick fixer is to buy off the hedge when the original trade is out of danger of needing a hedge. Okay. Now the thing is, if we wanted to trade manually, we could literally close these two trades right now because we have a profit in that transaction. The quick fixer's worth 116, the hedge is negative 83. So we have about a $25 profit in the transaction right now of closing these two trades. We could do that if we wanted to. Then, if the original trade again went 15 pips negative, it would hedge again and make 2 more orders for quick fixers. Okay? But we'll just let it run, because most of the time when we're running this program, we're not going to be going in and manually closing these trades. But we could if we wanted to. Okay? But you never close a hedge for a profit. Never do that. And anytime you close a quick fix in a hedge combination, you want to make sure that there's enough money in that combination that you're making a profit. And you have to also remember the cost in the trades. So, you have a $6 cost in here for the commission for the 2 trades. So you have to deduct that from the profit that you're seeing in the 2 trades themselves. So actually we have $90 of negative, right? So we had 84 here plus 6, $90 of negative coming off of 122 pip profit. So right now it would be a situation where you could close those two trades and take that profit and just be happy. If this would go 15 pips negative again, it would create a new hedge and another quick fixer. But if we just let it run and it gets down to where it will close that hedge by itself, then the profit difference that we would have between the quick fixer and the hedge would be more money, because as the price is moving down, every pip, the quick fixer is gaining $20 per pip. The hedge is going more negative, but only $10 a pip. So every pip that we can go down before we close this combination of two trades, the more money we make, because this one's gaining more faster than this one is losing more. We're actually only about a pip away from having what you'll see. If the price can go down just a little bit more, you'll see the hedge disappear because it will close, and then you'll also at the same moment in time see a profit stop added to the quick fixer. I think if we get to 15.9, it's gonna do it. 72.15 and then 9. 15.8. No, not yet. Maybe we have one more pip we have to get. The thing is, it also has to take the spread into account. So sometimes, depending on what the spread is, it will make a little difference on when it closes the hedge, and that's the profit stop to the quick fixer. Slow markets are so frustrating to watch. I apologize for this. Come on, baby, get down there. Actually, when it hit this low spot right there at the low on this chart, it actually hit a place that was a mild resistance area, and that's why it's bouncing back up right now. Now if it comes down and hits that same, not resistance, but support area again, it'll probably break through it. And if it does, then the price should probably drop down to at least somewhere between 72.10 and 72.08. But if that support holds, then we could literally go back into a higher high than where we've been so far. So let's hope it gets on down. There we go. See it? Okay, the hedge disappeared, and now we have a profit stop on the quick fixer. Now, the quick fixer keeps moving. Did you see it? It moved from 15.7. Now it's 13.7. So what's happening is the profit in the quick fixer, more and more profit is being protected. This is a hellaciously good trade, by the way. We're already down to 17.07. And like I said, this price could, actually, I would think that this would be about it for this move. If it does keep going, it could easily go as low now as 71.98. Okay, but we're actually right at that place right now where I said I expected it to fall if it broke that that last support. Oh man, this is a good trade. This is a good trade. There's really nothing to stop it now until it gets down to maybe 71.94. This could be $1,000 trade today. It could happen. Come on, baby, keep going. See, we're already down to 72.01 protected. Oh, and we just got a new trade enter. Now, that new trade entered on both of our accounts. See? And it closed already. Okay, so what happened here? Let's go look at this. Look at this. This is amazing. Okay, so we'll do them by exit time. What happened is the quick fixer. Let's go ahead and add our comments so that you can see them. The quick fixer closed the hedge, put a profit stop on itself, and then the profit stop continued to move, so the quick fixer got more and more and more profitable. So the profit that we actually made off of this transaction of closing the hedge and the quick fixer was $350. That's huge. That's a huge trade. And then just a few pips later, the original trade, that was the trade that had hedged to begin with, came out for a profit, and it made $65. So that's a really great trade. Okay, so when we go to custom period for this and look at just what's happened in the current trading day, all we had happen so far was we had an original trade from yesterday's trading day that hedged and quick fixed, and we've made $400. That equates to 8% in the account in one trade, because essentially the only real trade here is the original trade. But we also had a new trade open. Okay, now this trade, this original trade, actually opened in both of our two trading accounts at the same time, right? This is the account that we're actually really watching. And so we got an AUD USD trade that opened. Let's view the market watch window. Put the chart over to AUD USD now. And we'll make that small enough that we can see the whole chart. This bigger. Okay, so this is a 15-minute chart. Let's drop it back to a 5-minute chart. Now, our trade entered at 72.24.8. So if we want to know where that is, 72.24.8 would be right about here. That's about where this trade entered, and it's a buy trade. Okay, so let's do this. Let's go put a little mark on the chart. Uh, 72.24. I wish it would actually do better than that. Somewhere right around there is where the trade entered, so that we can kind of keep a visual of about where it entered. Okay, but it's currently negative. The price went down to 77.16. Okay, so our trade so far has been about 8.5 pips negative at one point. right? Right after that trade entered, I don't know if you guys noticed or not, but I did. But actually, it got up to be about $30 profitable, which would be about 3 pips of profit, right? But then it went negative. Had it gotten a little more profitable, it would have added a profit stop on itself and protected that profit. Okay? But anyway, this situation over here, it doesn't get much better than that. It just doesn't get much better than that. Okay? That was a good trade. If we had one of those trades every day, that's all we'd need. That's it. That's all we'd need to do really, really well in our accounts. Okay, but see, this trade right now is going the wrong way. So the thing is, if our trade becomes 15 pips negative or about $150 negative, then this trade's going to hedge. And if it hedges, it'll build a quick fix. And then, we'll want to see the price turn around and start going up, right? So this is in AUD/USD. Okay, we should be picking up a hedge and a quick fix here any second. Because I saw it be $150 negative. That's about 15 pips. I have vision issues, and it's really hard for me to see this stuff. So I'm going to scoot it around to make it a little easier for me to see it. Now that just missed picking up its hedge and quick fix, probably by whatever the spread is on that pair, which is not much of a spread. It's probably less than a pip. But it got about as negative as it can get without picking up the hedge and the quick fix. So this is getting exciting. I like watching the prices when they're actually moving. Way better than the last 2.5 hours where it's just been going nowhere. Okay. I was really kind of hoping that while we were having this meeting tonight that we would get a flurry of activity. Typically what happens with forex is the prices kind of will flurry where you might pick up trades in multiple pairs in a real similar time, just boom 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 boom, and they'll all go in, and then there we go. There's our hedge, and there's our 2 quick fix orders. Now, depending on how the price moves, one of the 2 quick fix orders will turn into a trade, and the other one will disappear. Okay, so, we got a series trade. Okay, so we have 2 trades now. We have an original trade. A series trade is like a second trade that goes in. It's because the original trade moved a certain number of pips, and then the hedge goes with the original trade. The 2 quick fixers will go with the hedge. One of them will, the other will disappear. But yeah, we're finally starting to see a little action here tonight. So it's a good thing. Well, our hedge is getting more profitable. That's actually good, because the more profitable the hedge can get, the more likely it is we'll pick up the good side of the quick fix, and we did. Okay, so our quick fixer picked up. And now we have a new original trade in a different pair. But this quick fixer goes with this hedge. Okay, we have a new original trade. We have a series trade that's not yet hedged. And this original trade goes with this hedge and this quick fixer. Isn't this fun? Okay, I hope you guys are enjoying this as much as I am. I love watching the EA work because I don't have to do anything except sit here and watch it, right? It does all the thinking for me, okay? And it just doesn't get any better than that, does it? I just think this is very exciting. So anyway, now our quick fixer is not that far off from closing our hedge, right? And so let's hope it does. Let's hope this AUD just jumps right back up to about here, and we'll make a lot of money on this one because we picked it up at a 7 pip advantageous spot. So our quick fixer will be very profitable when our hedge closes for not a lot of negative, only about maybe 2 or 3 pips negative. So we should make a good profit off of this quick fixer when it closes this hedge. Okay? Come on, baby, get on up there. Let's move. Let's do this thing. There's also a very high likelihood that this price could drop down to somewhere between 76.84 and 76.50. So we would sure like to see this quick fixer buy off this hedge before it drops on down like that. But it could drop down enough to hedge this quick fixer. That could also happen. But we could also just as easy bounce back up to somewhere between 77.25 and 77.30. Hey, Contori, are you there yet?
Yep, I'm here.
Okay.
Yes, ma'am. Yep. Oh, let's see. What do you got going on here?
Well, I'll tell you what. Look at this on this account.
Oh.
Wow. On the
Let's
history. The original trade that I closed earlier in the afternoon because I just didn't want to watch it go negative again.
I saw it.
It hedged and quick fixed. Look at this quick fixer. Look at that.
What the heck? Man, let me hold. Wow. Yeah, I ended up, you know what's funny? I saw that trade because I saw the other two, which I saw that you got one that I didn't, but my internet's been acting a little weird. But I saw that trade and it was positive $30. So I was like, I haven't really gotten any trades this week. I was like, man, this is what my thought was. I was like, I almost hope it goes negative. I get a hedge and quick fix, and then I can make up some ground with that quick fixer. And sure enough, I left it there. I could have closed, and then it went positive for 30, and then it was negative for 50, and then I looked up again, and it was positive for 20, and I was like, I was like, it's okay. I'm gonna let this one stay. Like it meandering along all day. I already knew what was coming, but I was like, I kind of don't care. I kind of want that to happen, actually.
Did you leave it in?
Yeah, I left it in.
Did you get 480 on it?
Let me check. Right.
I bet you did. You made more money so far this week than I've made this week. I mean, in this trading day.
Right. Let me see.
And the original trade even moved. It came out for 65. It just didn't get any more exciting than that. I sat here.
Man, yeah. See, I'm so glad. See, I got the original trade came out for 65. Man, the quick fixer about 300. Man, see, that's amazing. That just made, that's so
That
awesome.
made you made
$367.
more money than I made in the entire trading day yesterday.
And and that's why I was like, man, I think I was gonna close, and I was like, man, I wonder if this could just make up the difference. And I was like, and here I didn't expect it to do that good.
I never
I mean,
expect them to do that good.
wow, it must have shot off. Oh yeah, 2 lot, but still, wow. I mean, but if you take the 367 plus the 65, I mean, that's what is that, four? No,
You,
5. Or no, sorry,
no,
it's
you made
367 because that's
400
the.
on that. I can tell you right now, you made $406.60.
Yep, after fee. Yep, after fees, $406, and that is beautiful.
Yes.
Gee, that is so beautiful, man. But still, you're having.
I still had a
'Cause you
good day. I
closed
don't
that
care.
trade. Oh, you closed it
I
on the one
know.
account.
I closed. This is a different account where I left it
Gotcha.
open. Okay. But on this account, the account that I'm actually following, I closed that trade today for $25
Oh, that's so funny.
because I got sick of watching it.
Yeah, and
See,
I
if
was
you
like, I
walk
didn't have any
away,
trades yesterday,
if you
so
just
I might as well
walk
go ahead
away
and.
and don't watch it, I mean, that's the whole thing about it. You almost want to just leave the damn things alone. See, okay, we just had another quick fix close a hedge. And
Right. And I was like, man, I'm going to close this original, but I'm like, let me just let them do what they're doing. Oh, and it came out. Never
yeah,
mind.
it
Oh, no,
came
the
out.
quick fixer came out. Wow. Okay. Look
Yeah.
at this. This account is, this is awesome. Where's everybody? Wow. This is,
Everybody
what did
left.
you say?
Everybody's already gone.
This,
They all
they're
left.
missing all the good
Yeah,
stuff.
I know.
Dude, it's just another $131.
Who
Man.
doesn't love forex trading? Who doesn't love this?
And we still have an original that could technically we could close for $30, but I'm like, let me see. Do I want to just take it?
Yeah, we've made it now $130 so far in this trading day.
Yeah,
For trades in this trading day.
yeah.
But
Oh, this is amazing.
we've got
No.
profit stops on both of these trades now.
Oh yeah, this is
'Cause,
awesome. These are good regardless.
yeah, these two will close for profits no matter what.
Yeah, no matter what. Dang, it's been a nice little evening.
And I wouldn't mind if that original trade went down and hedged again. I wouldn't really care. Let it
Yeah,
let
oh, yeah.
it let it go. Let it hedge again if it wants to. We're gonna make a nice profit off of this one.
Man, yeah. As long as they keep moving up, that stop will keep slipping behind it. Oh, there it goes. We just lost.
Yeah, it came out. Oh well. Now
Oh
this
well,
one.
but still. Look at this, man. This is a crazy. In
It's
the
a great
last
day.
hour,
It's a great day.
gosh.
$79 off that series trade. So if I don't make any more today, I'm happy. $200 is 4% in the account.
Jeez. And we still got one working that's coming out for profit at some point here in a little while. Man, this is insane. Oh, this is. I'm tickled.
Too much fun. That's all there is to it.
It really is like,
And if
man, I wish. Yeah, it's stellar. It's just absolutely stellar. This account, these settings are superb. Oh, there it goes, dropped. But it looks like that original trade might hedge at 109, couple pips.
well, it's got about 5 pips left. 4 pips. Four
Yeah,
more pips. That'll
4.
hedge again. Let
So
it
we
go.
got
Let it go.
7 on that
Now
one.
this next time, there is a threat that it could actually go into a level 2 hedge
Mm,
because I'm looking at the full charts.
got you.
But
Yeah,
hopefully not.
hopefully.
But who cares? We're having a good day. That's
Yeah, really. Man, this has been a great week, actually. I mean, even though I don't care, like overall for the
oh my
system
God!
itself.
It's been a fantastic week already. I
Yeah,
have no complaints if we don't get another trade all week. I won't be complaining.
absolutely. Man, $649 in like an hour, something like that. Yeah, that's insane. That's insane. Oh man, I can't wait. I can't. We got 2 weeks. 2 weeks.
Week and a half.
Yeah, a week and a half. It's Wednesday. It's gonna be great.
Okay, well, it's 10 o'clock, and so I think everybody has got the information that they wanted. If you are interested in the magical program, please come to my website and send me an email. I'll send you some printed information and links to some videos to help you get started as far as creating the trading account with the broker and a cryptocurrency account. And hopefully, I'll see you all on May 16th. So, thank you for listening to this information and happy trading, everybody. Bye for now.